It's May 9th, 2025. Folks, pay close attention to the date. Market conditions change over time. Richard Dwyer, gamblersadvisory.com, a free site. Also, digitalassetlife.com, a free site. I've owned both for years. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. If you have held Ethereum over the last 24 hours, you know that it's up double digits, right? Folks, pay close attention to the Ethereum upgrade to Petra. That's increased capacity, that's increased speed. Understand that while Ethereum carries risks, it is a proof of stake digital asset. It's really the base layer on an entire ecosystem that you need to pay close attention to. Right? DeFi is blossoming, and this really is just the early innings still of that ecosystem, right? Let me backtrack though. The real purpose of this video is to talk about criticism of cryptocurrency that's been bandied about by one of the best critics out there, Peter Schiff. You want to listen to his recent videos for a host of reasons, not just his critique on the market, which I believe is spot on, but also his critique on crypto, which I disagree with. Right now, I'm not a disinterested player. Understand how I got involved in crypto. I was into silver. Right, I was buying some silver coins because silver was at a low point a few years ago. Right, and I thought, you've got to be kidding. If you know the history of silver, you understood that it was a screaming bargain then. Right, folks? Believe it or not, it's even a bigger screaming bargain now. The market just hasn't fully acknowledged it. Look at the gold-silver ratio. Do your own research. Don't depend on others. Right? So, while I was into silver, I was already predisposed to the idea of a limited supply asset that had the ability to be used as a method of payment that could be used as money, right? And of course, because I was into precious metals, I already understood the argument for gold. So along came Bitcoin. This is years ago. Along came Bitcoin, and it shocked me. Right, here was a limited supply asset that could be used as a means of payment that didn't have the storage problems inherent in storing precious metals, and that also was perfectly capped. In other words, there's always that undiscovered gold reserve someplace. There's always that future mine that people are going to develop and flood the market with its precious metals. You can't do that with Bitcoin, right? Bitcoin is capped at 21 million, right? So the idea of a technology coming along that prevented a digital double spend, the idea of a proof of work system involving miners was just mind-blowing to me at the time. Now, I can't tell you that I knew at the time that Bitcoin would get over $100,000 a coin. But everyone in the crypto space understands the possibility, right? I thought it was remote, but I thought it was the perfect speculation, right? I thought clearly in a world of debt like ours, If there were network effects on Bitcoin and everyone understood the potential for the technology, given that Bitcoin is fungible, given that Bitcoin is easily transported, given that there's so many unbanked people on the planet, I thought there was a chance. I made some videos here on YouTube. Look at the dates on those videos. Well, you've had some spectacular crashes, right, in the digital asset world, right? I've been involved in some crashes. I've had a lot happen to me, right? I've had exchanges go belly up. The early days were like the Wild West, right? I had an exchange. I had a privacy coin on an exchange, and the exchange came and said to me, hey, we've lost a third of your holdings. I'm not kidding, right? They, tried to make the claim that my account had been hacked. Well, it was by them, right? Just understand you're in the world of privacy coins and things like that happen, right? I've had some accounts go up and down a number of digits, we'll just put. So I want people to understand that not every time is bullish for digital assets. Even if you're doing the math and you're thinking, wow, mass adoption of Bitcoin is going to lead to a value far higher than where we are, understand the market's going to be hostile at times. There's going to be huge volatility. I mean huge volatility in the space, right? You need to expect huge volatility in the space, right? Don't get so caught up in theory that you can't acknowledge and see what's happening right in front of you. So it's very important, and I mean extremely important, that you at least hear out the critics on digital assets. And I say so as someone with a cryptocurrency Substack page. Let me plug it here. It's Dwyer 70905 at substack.com. In fact, it's Dwyer 70905.substack.com. Right? It has a free layer. Stop by, check it out. It also has a pay layer. Now, one of the best critics of Bitcoin in particular is Peter Schiff. I don't get the feeling that Peter Schiff fully knows some of the promising altcoins on the horizon, right? But Peter Schiff is a gold guy. Understand, my own history involves the precious metals, so I understand him, right? He's a gold guy, and he makes some points. Understand, some of his arguments have actually been proven out, right? Years ago, he thought Alex Mashinsky of Celsius was a fraud running a Ponzi scheme. And of course, Alex recently got sentenced to 12 years in prison. Celsius ended up in bankruptcy, right? I was involved in that bankruptcy as a creditor. Lost a meaningful amount of money in that bankruptcy. Did get some of it back, but lost a meaningful amount of money. I would have been better off, quite frankly, just holding the Bitcoin that I foolishly delegated to Celsius. So make no mistake too, the digital asset world has some bad actors. But what I want to do is to talk about Schiff's criticisms that I want digital asset holders to take to heart, right? To carefully consider, to have eyes wide open, right? For me, the best criticism Schiff has is the idea that there is already a hedge to inflation, right? And it's one that has been with us for hundreds of years, right? And that's gold. His argument is, gold actually has substance behind it, right? With the gold I have, I can actually do things like, turn it into jewelry. I have something tangible, not an abstraction, right? Obviously, it's a quick starting morning here. His argument is your hard-earned savings, if you already have a perfect hedge to inflation, and gold, of course, is jumping in value. Its rate of return in recent years has exceeded the S&P 500. Right? If you have that kind of monetary option, why would you risk your hard-earned life savings on digital assets? Right now, let me just point out, one reason is because the upside on digital assets is so much higher than it is on gold, right? The fact that gold has been with us for hundreds of years would imply that gold really is somewhat fully valued, right? Bitcoin isn't close to being fully valued right now. If you're a gambler who devotes a portion of your portfolio to speculations, right? Why wouldn't you pick the higher upside of Bitcoin over gold? Right? Schiff has some other arguments. Gold is immune to power outages. Right? Bitcoin really is a derivative of the fitness of the internet. Right? Understand too, we can talk about Bitcoin being decentralized, right, as a proof of work digital asset. The flip side argument is that we've seen governments in places like Egypt during conflict turn off the internet. Right? What good is having a very decentralized digital asset if it rides on top of a internet that has a kill switch? Now, hardcore cryptocurrency types will tell you that that issue's being addressed, right? You have hardcore believers in cryptocurrency who are, of course, encouraging entrepreneurs to come up with platforms like SpaceX that allow for internet access that's a workaround the kill switch that local governments can use to kill the internet, right? But be aware of that argument, that no matter how decentralized, proponents will argue a Bitcoin or a Caspa is, right? Just be aware that the argument is if it rides on an internet that has a kill switch, then of course it can be killed. Let's continue. Schiff has another argument. It's over the head of much of the public. The argument is that current technology allows for transactions to be done in gold. In other words, the gold can be in vaults. I can use digital networks to do a transaction that clears quickly and that tells the powers that be to transfer the gold being held on my behalf in a vault over to a merchant, vendor, the other party of the transaction. Right? The public doesn't fully appreciate this argument yet. It's actually a powerful one. Right? Because the idea of crypto is that we can have instantaneous transactions. I don't need to be lugging around gold coins, $3,500 gold coins, to give you in the transaction. We can actually have the transaction resolved remotely. Be aware of that argument. Understand too, Schiff has another argument that digital assets really aren't money because there's nothing backing them. With gold, I have a tangible gold coin, I have a tangible gold bar, I have tangible gold ore. It can be stored someplace. We can do transactions. The understanding is that I'm really giving you something tangible, right? The coin, the gold ore, or at least the rights to something tangible. So it's a real transaction, even if we're just exchanging pieces of paper, if there's something backing the pieces of paper. Schiff's point is that there's nothing backing the digital asset. There's no gold in a vault that is actually being transferred. In other words, I'm giving you gold to buy a car, right? We're both exchanging assets. You get the gold that you can use for something else. I get the car that I can use to travel, right? With digital assets, you're going off of market sentiment and network effects, right? You're relying on the mood in the room, something you don't have to do if you are trading a tangible asset like gold, right? That's a powerful argument. Schiff compounds it by talking about the fact that software improves over time, right? You have a lot of older cryptos, including Bitcoin, that aren't as technologically modern as some of the cryptos that have come after it, right? Bitcoin has limited smart contract capability. It can't match Ethereum in terms of smart contract capability. You now have a development, zero knowledge proofs. You have an entire privacy part of the cryptoverse. Monero, for example, uses ring signature technology. As the software improves, Schiff's point is that the commitment people have to today's cryptos, like Bitcoin, are going to wane. We can say that Bitcoin has 21 million coins, right? Schiff's point is, that limited supply isn't going to prevent a competitor from stepping in with a more modern coin that holders of the 21 million Bitcoin might gravitate to. You might find yourself with a dying asset. You wouldn't if you held gold, right? Gold's been with us for centuries. Gold is gold. It's limited supply. It's limited supply enough, right? It's not a perfect limited supply like Bitcoin, but it's close. It's close enough, and it's much more durable, right? Someone's not going to suddenly show up with a better gold. That risk exists in the digital space, right? Schiff also makes the points that many digital currencies have already gone to zero. The technology is such that anyone can design their own digital currency now. There are already too many participants in the market, right? There are already too many coins out there. There's going to be a market shakeout. Aren't you putting up with significant risk for that ongoing and coming shakeout? With gold, of course, gold's been around. Gold's been tested by time. Gold's been vetted. Many central banks, some of the biggest, The United States, Fort Knox. China, which is supposed to have more gold than has been reported. The Bank of England. Russia. Major economies in the world have gold reserves. Right? Bitcoin reserves are just starting. In fact, in the United States, we have a crypto stockpile. We don't even call it a Bitcoin reserve. Right? This is new. Why would you risk your family's multi-generational wealth or recent wealth on something that's new and untested? I need for people to understand the risk involved. Look at the words behind me. It's high risk. I don't dispute that. But let me just say this. The Buffett indicator is still elevated by more than 50%. Now, this is at a time where we have major pension shortfalls. Right? Major pension shortfalls. I'm in California. The pension CalPERS out here is at least, I'm being very conservative, at least 10% underwater. I want you to think about 10 friends of yours who are looking at retirement or who hope to retire, right? And just imagine one of the 10 being told that they're not going to get their retirement, right? We're dealing in legal fictions right now too, impossibilities, where we're underwater by 10, 20, in some cases 30, 40% on some pensions, right? You even have governors of states with huge, I mean huge, pension shortfalls who are thinking about running for president, right? Look at the governor of Illinois, right? You just had a presidential election where the VP candidate for the Democratic Party is presiding over a state that has a huge pension crisis. The public doesn't even know to ask these individuals, how are you going to make up the shortfall? What have you done during your tenure in public office to address this pension shortfall? Right, folks, the public is clueless. Now, if you have a 10% or more shortfall at a time when stocks, according to Warren Buffett, one of the best investors on the globe, right? And of course, understand, you can just look at Buffett's own actions. He has a record cash hoard right now. He's just announced that he's retiring. When? This year. Right, folks? If you're a market participant, that's not promising. Right? One would have thought that, a extremely successful investor with a record cash hoard would be chomping at the bit to redeploy that capital once the market adjusts. Well, just understand, you have pensions with shortfalls before the market adjustment. Right? History tells us that stocks are overvalued by a large margin. Understand, in late December, the Warren Buffett indicator indicated that stocks were overvalued by more than 100%. Right? Think about that. The indicator was at 211% of GDP. Right? So let me just put this diplomatically. Pensions are going to have to retool. We have a pension crisis that we aren't even acknowledging. Right? Let me point out something else too. Stanley Druckenmiller, another spectacular investor, has pointed it out. The debt we have, right? Almost $37 trillion is premised on the idea that we don't have ongoing liabilities, that there aren't Social Security payments that are going to have to be made in the future. In other words, the number we have misrepresents the amount of debt we have. Our debt is actually far greater. So there's going to be a liquidation, folks. Right? You're already seeing it in the restaurant business. A lot of restaurants, you know, are under pressure, have had to declare bankruptcy. Right? Things we used to enjoy, endless shrimp at Red Lobster, for example, now we're finding out are just not financially possible today. Right? So in this world, what's going to happen is that out of desperation, pension plans are going to have to turn to riskier investments with extremely high upside. Folks, I see a natural marriage. This is at a time where New Hampshire and Arizona now officially have crypto reserves, where, you know, BlackRock, Fidelity, they're now in the Bitcoin ETF business, right? Where there are a lot of ETF applications, where there's a spot Ethereum ETF. Understand what a major moment that was, because Ethereum is proof of stake, right? It already had a blockchain fork that led to Ethereum Classic and Ethereum. They can actually stop that blockchain. And by the they, I'm not talking about elected officials. I'm talking about people like Vitalik Buterin and other leaders of the Ethereum movement. Unelected entrepreneurs could stop the blockchain. Folks, we already have spot Ethereum ETFs. It's already gotten past the Securities and Exchange Commission. That's the world we're living in right now. So here's what I think is going to happen. I think that you're going to have, you know, a bunch of people show up and propose that these retirement plans invest in Bitcoin, Ethereum, the better known digital assets. Right? Now, folks, understand, you already have Brown University in the Ivy League investing in, you know, a Bitcoin ETF. Right? You have a time where government, the federal government at least, right, let's break it out, is actually, you know, telling schools like Harvard, no more public money for you. These schools, I'm sure, have groups that want academic freedom. They don't want to be beholden to the federal government. They certainly don't want to hear that because they've accepted federal government research money, that the federal government now has the ability to tell them the criteria they must use in admissions and in conducting their day-to-day business. So understand, as these elite private schools pivot away from government funding toward more independence, academic freedom, they're going to be financing pressures. And some of these schools are already turning to digital assets. So I want to be clear here. You know, if you're in the part of the digital asset world that I am in, right, you're not trying to compete with gold. I know this sounds completely ridiculous to many, but your goal, G-O-A-L, is actually to disintermediate government. right? The idea is that the central bank model is a failed model, right? Market should make allocation decisions, right? Money shouldn't be issued by the government, right? You can have communally owned money. That's what Bitcoin is, right? Where people buy into a privately developed monetary system and then can do transactions internationally, right? One of the more curious parts of the crypto world is the explosion, and that's what it is, of stable coins, which are actually denominated in fiat currency. If you're a long-time cryptoverse person, that's heresy, right? You're trying to disintermediate fiat currency, not make a digital version of it, right? So just understand the cryptoverse has many parts. There are some coins out there that are more technologically advanced than Bitcoin. The public dialogue right now is lagging reality, right? Let me also say too, I don't believe in meme coins in the slightest. The president right now is involved in meme coin projects. That's shocking to me. So when you have uncertainty and chaos like this, folks, that's where you make most of your money. As the people who have held Ethereum over the last, we'll stretch it out, 48 hours. No. Right? So pay attention to the developments in the market. Think globally, not locally. Right? Here we imprison CZ, the head of Binance. Right? Understand, countries are actually approaching CZ. Binance agreed to some restrictions in the American market. Hasn't stopped them. Other countries who are now accepting crypto, who are accepting the fact that it's a economy globally, that there are many merchants in their jurisdiction using crypto. They've gone to Binance. They've gone to CZ, a man with a record here in the United States. And they've asked a mind-blowing question. How should we structure our crypto rollout? That's where we are in the world right now. Right? Look at Binance. Don't be too tethered, and I did not mean the stable coin. Don't be too tethered to what's happening right now in the United States in terms of what's legally allowed and what's not legally allowed. If you're buying, follow the law that you're subjected to. I'm not here encouraging people to break the law. But my point is, if you're buying any digital asset, think globally. Right? BNB coin right now, that's been issued by Binance, that has a supply burn. Just understand, you can hardly mention BNB coin here in the United States because Binance itself is on the outs for now in the United States. Right? But just recognize that if you're making an investment based on the future value of the digital asset you're buying, if that digital asset is being used globally, you need to consider that in your decision on whether to purchase it. Let me make another point too, and it's shocking. Right? When digital assets first came out, as I mentioned, you had rug pulls, we called it, right? You would own a crypto, and then the people who released the crypto would disappear with your money. You had exchanges vanishing. You had exchanges telling you that a portion of your holdings have vanished. Right, folks? You are better off getting pickpocketed and losing your phone with a digital wallet on it that is encrypted so that your fingerprint is your portal into your digital wallet than you are getting pickpocketed gold coins that you have or fiat currency. Understand, in some ways, digital assets in just a few short years have become more secure for the average person than walking around with cash. Understand, someone could rob my phone and not have access to the wallets I have on the phone. Right? Just food for thought. Whereas, if someone pickpockets my wallet, they get the cash in the wallet. Right? Maybe my credit cards are modern credit cards that I can turn off using a smartphone. But there's that period between when I was robbed and when I learned I was robbed. And during that period of time, people can use the smartphones, can use the credit cards, particularly in this touch and go credit card world. Right? Someone can pull into a gas station, just touch the card to the gas dispenser and fill up their tank. Right? If they've robbed my phone and they say, oh, this guy has a Dash wallet on his phone, and then they try to get in the Dash wallet, guess what? My Dash wallet requires my fingerprint. Even if I don't know the phone's been robbed, they can't use it. Right? Let me say this too. I mentioned Dash. Understand, if you're using the Dash app on a smartphone for a nominal fee, and I mean less than $5, now that Dash has debuted Evolution, right? Understand, you can have your own Dash address, that you choose, kind of like your own vanity plate. So, someone owes you money. Rather than them handing you money where a third party sees you getting handed money. Let's say you're in a casino. This is always perilous. And, your bet wins in the sports book, and you go to the counter and everyone sees you getting cash. Right? You're at risk there, particularly if you're not staying in the casino. You're going to leave the casino. You're going to walk on the Vegas Strip. You're going to go to another casino. You might go to a restaurant. You might have other plans for the evening, right? Someone might follow you out of the casino, knowing that they just saw you get $100, $200, whatever, right? Cash. They might follow you, right? Understand the beauty of where crypto is right now, particularly Dash. I have a vanity account. Someone says, hey man, let me pay you the money I owe you. I can just say, hey player, send it to Dwyer 777. Right? Just send it to me using your Dash app on your phone, that wallet. Just send it to me, wallet to wallet. Right? I can say that at the casino. Unless someone is going to rob me, cut off my finger, then use it to access my Dash wallet, I'm good. I actually have heightened safety. Let me make a couple more points. This video is going too long. Let me just say, too, that cryptocurrency is more transparent. Now, I know the privacy buffs, and there's a privacy world of crypto. You know, you heard me mention Monero. You have, Horizon and others doing some great stuff in terms of privacy. What I want people to understand, though, is let's say I'm an African merchant. My access to banking is limited, more limited than it is in, let's say, California. I'm doing transactions, right, folks? Bitcoin, I can do the transactions on my phone. The transactions are actually recorded on the blockchain, right? I can look up the history of my wallet to do accounting for my business, right? I don't have that if I'm trading gold or stuff like that. If I'm dealing in cash, I don't have that ledger. No, I'm not saying cash should be outlawed. Trust me, you know, I'm someone who strongly believes in privacy, strongly, right? But there are moments where you want to use a method of payment that you can actually trace, right? That you can actually, just in organizing your own finances, you can actually look at the transaction history. You can do that with some cryptos, right? We're already there. So what's going to happen? What I think happens is elite universities, over time, most universities are going to have a portion of their endowments in high-ranking, popular, great network effect, digital assets. Understand, pensions, many of them aren't viable with fiat currency, right? They simply aren't. They need to convert over. Now, maybe they convert over to gold, but I believe they're also going to convert over to Bitcoin and other preferred digital assets that survive. I'm not saying everyone will. Right? Understand, I don't believe the choice is gold or Bitcoin. You can pick both, right? So you can get the benefits of gold. I own some gold, right? As much as I love digital assets, I own some gold. I don't have to put all my eggs in one basket. The point is that gold and Bitcoin are better than fiat currency, right? And of course, if you're in the world of digital assets, ask yourself the audacious question: what's better than Bitcoin? You can hear from Bitcoin maximalists. Max Kaiser is excellent at enunciating that point of view, and he does so weekly on X, right? Just follow him on X, right? Get the point of view. You have Bitcoin maximalists out there. But you also have people like me who also believe in altcoins and who ask questions like, is there a proof of work cryptocurrency that exists right now that's more technologically developed than Bitcoin? Right? Understand, as central banks, which are entrenched, it'll take a while to disintermediate them, as central banks ask themselves questions like that, they may end up investing in some altcoins that satisfy that criteria. And if you're a holder of the altcoin, it'll make you rich, right? You'll pick up the paper and you'll hear that some government has bought some huge amount of some digital asset, and you're going to realize that that's validation on the fact that that digital asset is already used on a widespread basis in commerce. Those are my thoughts this May 9th, 2025. I encourage people to pull up some Peter Schiff videos. You want critics who can, in economic terms, lay out the arguments against your own position, because, of course, this really is a relentless search for knowledge and understanding and market opportunities. Right? And of course, I encourage people, Peter Schiff is also on X. I encourage people to, look up the Bitcoin maximalist crowd, Corey Klippstein, Max Kaiser, Michael Saylor, right? Hear their point of view. They believe that at the end of the day, only Bitcoin is going to be standing. I encourage people to also follow Vitalik Buterin and Ethereum. I personally believe the upgrades have completely lifted the potential of Ethereum. That's a market I'm into, as well as others. Right? You heard me mention Dash earlier. The key here is to do your own research, to hear from critics, to look at debt levels, to look at pensions in Illinois, pensions in Kentucky, pensions in California, and to ask yourself, is this sustainable? It's to listen to politicians. I understand. Politicians want to tell you that they view pension obligations as a promise made to firemen and teachers and stuff like that. Ask yourself a better question. Is the current system sustainable? What can we do to make it sustainable? Right? When you hear about a $36 trillion debt or close to $37 trillion debt, ask yourself, does the calculation factor in all of the payments the government has to make? Is there unacknowledged debt? How does that impact the math? What's the derivatives debt? Right? Let's keep this conversation anchored in reality, not political talk. Those are my thoughts. I look forward to yours in the comments section of this YouTube video. Thanks for stopping by.